Good evening. This is the Elliott wave update for the S&P 500 for Tuesday, November 2nd, 2021. The markets remain volatile. The markets remain on cruise control to reach new all-time highs. That was achieved in the S&P and also in the NASDAQ today. And I believe also the Russell managed to cruise up there and put in a new all-time high as well. So everything seems to be lining up. It is taking longer than maybe many of us expected. It's going against the odds that many of us weren't looking for. But when I open it back up, again, beginning on the hourly chart, and I look from the starting point, that what I'm counting is an intermediate B wave that has actually turned into an irregular B wave. So that adds some additional layers of Fibonacci extensions for the move up. Everything continues to follow fairly clearly the same pattern. And what I'm counting is an A and a B, and we're in that final C wave up. And within it, everything is truly following according to rules and guidelines that Elliott himself wrote down and passed forward. And so, as I've discussed several times, part of my whole reason for writing my own work on, as an ebook entitled "You Are Your Own Guru," and the whole purpose was, again, to educate, but to go back to what Elliott wrote, to go back to the original work, and to ensure that the count is according to the way the originator of the theory put it down. And I am following that, except there's one small difference that is occurring, and that is that on Elliott's observations, he found that it was the third wave of 1, 3, and 5, that it was the third wave that often extended within. So it became the extended wave. And his observation really was that either 1, 3, or 5, when we're in a 5-wave impulse, that 1, 3, or 5 would extend. And so most of the time he found it within the third. I am now finding it in the third, and then also the fifth, and then within the fifth of the fifth, etc. So I'm now going to break that all down. But suffice it to say that I am satisfied with the count as it has been put out thus far. So we remain in a C wave to finish so a minor C wave to finish an intermediate B wave. Now, breaking down into that C wave, it will consist of, since a minor degree, it's going to consist of 5 waves of minute degree, of which we have 1, 2, 3, 4. The 5th wave of minute degree began at 4513 or 4514, we can call it. Sorry, that's not true. 4511. And is still underway over 100 S&P points higher. So that within that 5th wave, though, we have, which will break down into 5 waves of subminute degree, we have 1, 2, 3, 4. And again, within that 5th wave, it is subdividing. And so we have, now I'm going to bring this down. So actually, I don't need to take that back. I am just going to open it up from here, keep it on that hourly chart, please. All right, so sometimes, there you go. So here we are, this is the bottom of the 4. We have 1, 2, and then 3 subdivides. 1, 2, 3, 4, 5 for the 3rd. Then we have the 4th. And now we're in the 5th of the 5th of the 5th. So we're there, we're getting up there. And guess what? It is subdividing. So I'm counting it again. This is on an hourly basis. 1, 2, 1, 2. And this may be 3, and we've now maybe done 4, but I don't think so. If I had to count it, 1, 2, 1, 2, 1, 2, 3, 4. If that completes it, we need to go up, break it to a new high above 46.27. Doesn't have to be much, but it needs to be higher. And that'll complete the third. Then we do another fourth, and then a fifth, which completes another third, and then another 4, and then another 5. So I'm continuing to add then extensions to show where we think these fifth waves will come in. So right now, even in this subdivision, I only have 1, 2, 1, 2, 1, 2, 3 of this internal third wave. 4. If it did, it ended in a failure. All things are possible, but I think either one way or the other, I think we need to go up and complete this, pull back down, run back up, complete the next level out, pull back down, and then go up. So what does that kind of tell us of where we might end up? Well, I think what I'll add now is an additional extension to, and I'm going to use this and this level to give me a fifth wave to complete the third. And that's going to be from this side to here. That didn't work. So very, very sensitive scroll. We're going to go from this wave to, okay, so I'm looking for the internal fifth wave. 7. Let's take it down to there. And here we have 50% of 46.31. And then we have additional up there at 46.35. And then a big cluster right into the 46.39, 46.41, up to 46.50. Now, this fifth wave could, because remember, this is what I'm measuring against the third, it would equal this third at 46.48 to 49. That is a possibility, but now I'm looking at this just to complete this third wave. Then we still have another pullback and another rally to finish this third wave. So we're just finishing 3 of 3. So this is 1 of 5, 2 of 5, 1 of 3 of 5, 2 of 3 of 5, 3 of 3 of 5, 4 of 3 of 5, and I need one more high to complete 5 of 3 of 5. So that's where, wherever this happens, that's where the 3 is going to be. If I label this, I have 1, 2, and then it subdivides. 1, 2, 3, wherever this ends up, 4, 5. Right? 1, 2, 3, 4, 5. And then again, 4, 5. That finishing wave, I believe, will likely get us up into this area. So we have the 100 level, and that's for this 5, right? That's what that's lined up. So for this whole complete move, it's still wrapping itself very cleanly around 46.60. Now I'm getting more of it. So again, we have it from here at the 3A2 for the larger fifth. Excuse me, the 3A2 is for the whole B wave. This would then equal 1.7 if it gets up that high. This fifth wave equals 1.70% times the length of its third. Still fits. And then we do again, this fourth comes in at 100% at the same level. Now we've got another strong point right there. And then we have this to complete that third, and then another pullback, and then I'll add that final which will go from this point up to the top of the third, down to the bottom of the fourth. So then we'll see. And I am getting more convinced that the numbers are going to be correct and that the S&P will ultimately at least get up to, come on, at least get up to 4640-ish to 50, and then eventually to 60. So we have all those wonderful round numbers, 4640, 4650, 4660. And that's what I think is going to finish this whole glorious move. And then we should see a change. Now, tomorrow we have the Fed. They're coming out with their meeting results. The expectations remain that the Fed's going to start to taper, but they were buying the bonds today. Again, if the way to taper is they're going to, start to pull back the auctions and, their buybacks, and everything starts to get tapered. And then eventually it leads to higher rates. But they may do that again tomorrow as well. So I think that the market will have a reaction one way or the other. The way things are seemingly playing out right now, it's not going to be a reaction that they're going to be all wigged out about. So I'm thinking that they're pricing in a positive reaction, maybe not, but a positive reaction to the results of the Fed meeting. Now, this market could easily just get up, finish its third, and then get the news, drop back down in a 4, and then realize, don't have to worry about that, and then run up and finish. That's the scenario that I'm kind of laying out. Doesn't mean the market has to do it by any means, folks. So upside, we're giving our levels. Downside now, say we get the shock of the shocks. We're going to know it, and we'll know it very quickly because they will start heading for the exits like unbelievable, unbelievably quick. I believe there'll be massive sell orders pushing a button and hitting the market, at the market. So there will be a huge vacuum because these buyers will turn seller, plus just everybody who wants to sell. So if they're not accepting what is being said by the Fed, this thing could just roll. Now, again, hourly chart, when they start breaking the 20, the 50, get out of the way, go with. And the 50 sits at 46, 4604. We're only at 4620. The 50 has walked its way all the way up to there. So that's not going to be a problem if this is a disappointment for that hourly chart to go slap down and really just start breaking below 4,600 pretty quickly. And the 200, the hourly 200 is just sitting at 45.63. That's not much of a problem. Then you got to go out to the daily. You check it on the daily. Again, this is a big disappointment in terms of that's what the news will bring about, the major shock to our system. So here, I got to take some of this off. You'll bear with me while I clean up the chart a little bit here. There we go. And then I'm going to take this guy out too. There. So here we are way up here in the stratosphere. And we're well above that 4. Come on. My computer, this is just, it's the mouse. It's being super. Look how far up we are. New all-time highs. We're going to hold them. But at this, on a daily, to start showing weakness, needs to close below the 4. Not only get below it, it needs to close below it. Then it needs to close below the 8. Then it needs to close below the 20, which happens to be at 45.20. So there's a lot of work ahead for the market to really put in a confirmed, supported high. It needs to start breaking down, and it needs to break down. And this is what I'm talking about. I think even on a daily basis, if the news is totally rejected by the market, whatever their decision is, the Fed, the market doesn't like it, then I think we start to slide. I think getting below 4,600 very quickly should not be a problem. And we'll go from there. But right now, I'm not really looking for that for tomorrow. I can't say that it won't happen, but I somehow just don't think. And this is kind of looking We're just holding in the pattern. And we're going to go up, finish this thing, come back down and go up again. We'll see. Downside, like I said, we'll know because it'll happen real quick. That's the level I believe we're at. It's not we're just going to play around. We'll just bring it down and keep it above 4,600 because we're still bullish. No, that's nothing news. If news is going to upset the market, it's going to take it below 46 in a heartbeat. That's where I'm going to leave it. Stay focused, trade smart, use the moving averages, let them guide your trades. We're going to have volatility in both directions. That was evident today. It's been evident for the last week or so. It's going to continue until we've reached our levels, our top, and then we can begin the next move. We can begin the next sequence. And then the volatility will follow the sequence. Okay, so I'm going to leave it. The next update will be Wednesday, November the 3rd.